welcome back. Hope you had a wonderful day. This is your tutor Charles Kafel, and I'm here to take you through labor costing and control. When we are talking about labor costing and control, here we are trying to mean how we can accumulate the costs we are incurring on the human efforts we are using in the production process, and we are computing the cost in terms of their basic salaries, allowances, and other bonuses, plus overtime and other benefits in regards to employment. First of all, you should understand that when you're demanding for labor, we only need that labor force simply because we have a certain activity that we need that employee or worker to do for us. So in that sense, the demand for labor is always a derived demand, since we only demand for labor as when the activity we want that individual to do for us is available. So allow me explain what a labor cost is. And when we are talking about the labor cost, we mean those expenses we have incurred when we are engaging workers in the production process. And when we are talking about the labor is simply the human effort, whether employed or whether skilled or unskilled, that are involved in the production process. So when they ask you for the definition of labor, don't again give a definition for labor cost. And when they also ask for the labor cost, don't again provide a definition for labor. When we are talking about labor cost, we are talking about the expenditure or the cost we are incurring. But when we talk about the labor, those are the human efforts that we use in the production of items. So here we are saying labor cost. This is the expenditure that an entity incurs as a result of engaging workers. And these may include the basic pay, allowances, and bonuses. But they don't stop there, because there are other non-cash items we give to employees, as in bonuses and overtime allowances or premiums. So you should know that when we are employing workers, for them, they see the kind of job they see whatever they are doing, and the money we are paying to them as the cost. For them, they see it as their reward for the work they are doing for the organization. But to the entity or to the business or to the company, it's an expense. When you're paying out money to employees, those becomes the operating costs of the business. So when you are talking about these costs, we have different classes, and these labor costs are classified into the direct labor costs, and those are the costs that are incurred in the production and can easily be traced on the product. Or those are the costs which can be identified on a given product or cost center or a process. But these other indirect costs, those are the costs which cannot be, they are incurred in the production, but they cannot be easily traced on the final product. So we classify those costs into the direct labor costs and the indirect labor costs. And we are saying for the direct labor cost, these are the costs that are directly identified with a cost unit or a job or a process or a product. We said a cost unit is the final product or the last item of a process. That's what we called the cost unit. So those costs which you can directly trace them to the product itself, they are called the direct labor costs. But you have also the indirect labor costs. For these indirect labor costs, those are the costs that are not directly identified or traced with a product or a service. And these may include the salaries that we are paying to the, let's say for a carpentry workshop, the salary we pay for the workshop supervisor is an indirect expense, because we cannot trace that supervisor is not directly involved in the production of the output. That's why we are saying the salary that is paid to the workshop supervisor in a carpentry industry, they are treated as the indirect labor costs, because we cannot trace those costs on the final output, but they just act as supporting staffs in the production, because when they are not there, we expect also the production not to go very well, because it is also hard to manage labor or employees. With that said, let's look at how we can try to control those costs, because the main point in labor costing is, one, we are trying to look at how much are we spending on the employees, and how can we control the cost we are incurring when we are employing those workers, not necessarily the extent that we are affecting the production, because from the employee point of view, when let's say you try to minimize the costs, the costs you are paying to them, like in form of reducing their salaries or giving them a less salary, you may find that their work is a bit affected. They don't work to their efforts, or they don't give a high output. So we are trying to look at how can we control these costs to the extent that they are not affecting the employees' productivity and the efficiency. So some of these costs, they can be controlled in different categories, or each department can contribute towards the controlling of these labor costs. The first department that can help in controlling these costs is the human resource department. The human resource department, those are the people who recruit the people who are going to be working for the organization. So we make sure that when they are recruiting those workers, they select those people who have the exact skills and experience that is needed to do a certain task. And they don't stop there from recruiting them. They also go ahead and give them the right training and make sure that they are performing to the required standards. So the human resource department, this recruits employees with the right qualifications and skills. They train them and maintain a database for all the employees. As the reason as why they maintain a database for all the employees is that you want to forget about the ghost workers when it comes in times of making payments. You make sure you record whatever employee that that the company is employing, and you try to follow up on them, and you see how they are doing. We are saying having the right people is key in ensuring minimum wastages. Ensuring minimum wastages, high productivity, and consequently low costs. Because if you have the right people, the people you have recruited, they have the qualifications and the skills we need to do a certain kind of job, you may find that you will be incurring less costs because they are competent enough to do the job well. So when they are competent and they can do the job well, it means even their productivity is going to be a bit high. So when they increase, when there is a high productivity and efficiency, we expect that we are going to be incurring less cost, because what we expect those employees to do is exactly what they are doing. So we will be having a low cost per unit, because when you're producing more, you expect that when you try to divide the cost of the items you are producing by the amount they are paying, you'll find that there is a very minimum amount that is spent on each unit that you produce. That is the first department, which helps in controlling costs. They control them how? By recruiting the right people with the right skills. The second department, which is the engineering department. This engineering department is you can call it the technical department. It's that department which oversees the need for workers, and they try to analyze what is needed for the job and what is the cost that is going to be incurred in when those employees are recruited, and what are we really expecting for them to do, because these human resource, for this human resource effort for them, their role is just to check the right people, but they compare those people with what the engineering department has provided, whereby the engineering department, first of all, it gives the job specification. When they give you the job specification, you will be knowing what exactly is required in that job. So when the HR department is operating, for them, they just consider what job descriptions are there, and they compare with what the applicant can do. So the engineering department, for it analyzes the job before it is forwarded to the HR department. So what they do, they make sure they give the right specifications for the job that is available, or for the vacant that is available. They analyze even how much amount of money is going to be paid when you are executing the job description, the job specification they have given above. So here we are saying that the engineering department does the following, and the following activities, they are the one who's helping us to control the costs. First of all, they do the job specification. This is a description of the specific knowledge, skills, and abilities that are required to perform a job. It is a summary of the minimum requirements for a person to apply for a job, and it aims at ensuring the best people to perform the job are engaged. So when they do this job specification, they outline the minimum requirement which they need for that specific vacancy that is available. Then it will be the role of the HR to execute whatever they have discussed. The second thing they do the job analysis. This involves examining the tasks performed in a job, the necessary competences or the competencies required to perform that task, and the connection between the tasks and the competencies. Of course, when you try to look at a certain job, you will see that if the person has this minimum, let's say minimum level of education, we expect that this person is supposed to be knowing this and this and this. So we compare what we expect from the minimum, let's say, education requirement of an applicant with what the kind of job someone is going to be doing, what are the tasks we are supposed to be doing. Then we compare. When we analyze, then we can make a conclusion and we say this, for the person to apply for this job, it must be having, let's say, a degree, let's say in accounting or a CPA, depending on the nature of the job you're applying for. The last one they do is, the second last is a job evaluation. This is a systematic way of determining the value of a job in relation to other jobs in an organization. When they are determining the wages or the salary to be paid for a certain job, you may find they compare within the organization. You may find that the job you're going to be doing is having a lot of activities that you are supposed to do, but they cannot allocate too much money that is not even in the range of the people who are above that job are earning. So they look at how the organization is performing in terms of the salary scale, and they also compare the activities someone is going to be doing. Then they decide which amount they are supposed to give for that particular job. That's why when you go for an interview, you find that when they ask for the salary expectation, if you give a certain amount which is not in the range of their budget, you may find that they will not call you for the job. Reason, it is because they cannot pay more than what they had budgeted, because they first make the analysis before they call people for interviews. By the time you come for the interviews, the salary is already there. It cannot be even adjusted. And if it is supposed to be adjusted, again, it's supposed to go back to the engineering department to see whether what you are suggesting and what you can bring to the table matches the money you are requesting. The last one is material renting. Material renting or performance appraisal. This one is always done by the supervisors and the HR department. For them, they are the ones who are responsible to check as per the job description that we said in this job you are going to be doing this and this, and we see what is the output, what have you been doing as in regards to your job responsibilities. If they find that what you have been doing is not exactly to what they want, you may find that it will be hard for you to get, let's say, promotion. Sometimes they may even terminate your contract before you complete or after the completion of the probation period. So allow me proceed to the next department. The next department, as far as controlling cost is concerned, is the timekeeping department. The timekeeping department is very important in an organization. And the reason why we need this timekeeping department is that we want to avoid the idle time that may be, the abnormal idle time that may be created by the employees. Because you may find that someone comes to work, but the person doesn't do necessarily what they have come to do at work. You may find someone comes, let's say, early and he sits, or someone comes and after signing in, the person leaves, and for you think the person came, so you are assuring that the person is working. Kumbe, the person is not even around the company premises. So it is better to know the time that the person has came and at what time the person is supposed to leave the organization. When you know the time someone is at least has reported for work, you expect the time, you expect that at that time someone will be doing something that is beneficial for the company. And this one helps a lot, especially when you are paid on time, when it is, the payment is basing on time, which is the time rate method of payment, whereby someone is paid for the number of hours someone has spent at the organization. If the company is following that method of payment, then they should be able to locate the time someone has spent at the organization, so that they can multiply by the hourly rate or the agreed payment per hour, so that they can know how much to pay the person. So when you keep time, you try to avoid those unnecessary wastages. Someone comes at work late and the other person comes late and leaves early. So we try to exclude that. So the timekeeping department, this maintains employees attending registers and computes the time that workers spend at the organization. The last one we can talk about as far as controlling cost is concerned is the cost accounting department. Remember, we said cost accounting is all about accumulating the costs. So the cost accountant is the one responsible for knowing the costs we are spending on labor, the cost we are spending on raw materials, and the cost we are spending on other expenses. So this one, they are the one who's making the computations of the amount of money that is supposed to be paid to each employee. The reason as why they come in as people who control the cost, we want to make sure we are paying exact amount of money someone. Let's say if you are paying by on time basis, not on a piece rate or other methods. You may find that someone may forge the time that I worked, let's say, for 10 hours, yet in actual sense someone has worked for 8 hours. So we make sure we compute the exact time someone has been at the organization, we multiply by the payment. So the role of a cost accountant is to make sure they pay you the exact amount of money or for the exact hours you've worked in the organization. And that's all about how we accumulate those costs and how we can control the costs. The other thing I want to look at is labor turnover. Labor turnover is the rate at which employees leave the organization and join the organization. The rate at which someone, you may find in an organization that many people are leaving the organization, but as they leave, more people are coming. It is normal to be having at a certain rate, or at a certain extent, it is normal to be having that labor turnover. But when it becomes too much or to the larger extent, it becomes bad to the organization, because at the end of the day, when more employees are leaving the organization, you are incurring more costs in terms of recruiting new people. And on top of recruiting them, you are also supposed to train them, because they come when they don't know the company products and the procedures, plus other regulations within the organization. So at a smaller extent, it is important because by the time someone leaves the organization, you may find that there are other people who have been working and they need to get promoted. So it is important for some people to leave, but to a smaller extent. But to a larger extent, it is a bit dangerous because you are incurring more costs. So when we talk about the labor turnover, this is the rate at which employees leave and join the organization. It is a practice for some workers to leave the employment while new workers join to replace those ones leaving, leading to a change in the workforce. When the workforce is changing, meaning we are getting new faces as the old faces are going away. In the same way, the other organization will be receiving the people who've left somewhere. So that's how it is. But as I said, that change in the workforce is what we call the labor turnover. But what we are trying to look at is what is the rate, or to what extent are people leaving the organization? That's what we are trying to look at. The calculation is, we always compute this thing in percentage to the extent that when it exceeds 100, you just know more people are leaving the organization or more are coming in, depending on which method you are using to calculate, but we always put it in 100. We can convert it to 100. So I want to talk about what are the some of the causes that can lead to labor turnover. What causes people to leave the organization, and what causes others to be joining to replace those who left? Well, there are some of the causes, and these causes are categorized into the controllable causes and the uncontrollable ones, whereby these controllable causes, those are the causes that makes someone to leave the organization, and even the management itself or the company has no control about. But the uncontrollable one, those are the uncontrollable one. The controllable ones, those are the ones whereby someone is leaving the organization, but the company has control. The company can control someone from leaving the organization. So when you are giving this one, these controllable causes, you may find that most of the times it can be they can be prevented from happening. So when I start with the controllable ones, the controllable causes of labor turnover, the first one, we have poor working relationship. This poor working relationship is in terms of, let's say, there is some bad habits which are existing within the organization, and that habit forces someone to leave. Let's say there is sexual harassment. Someone leaves the organization just because, not because the person was paid poorly, but because the relationship between the people he or she is working with, they are not friendly. So someone may try to leave the organization, reason because of the poor working relationships. The second one, we can talk about the pure remunerations or the payment. You may find that the hourly pay, if someone is paid per hour, you may find that someone is paid a less amount of money to the extent that he cannot earn even a living. By the time someone reaches the end of the month, the money is already done. So you don't expect that person to be working, because at the end of the day, the money that person receives, you may find it is all wasted in transport and meals. So when someone is paid poorly, he can try to leave the organization. The third one, we can talk about lack of career development. Someone may be at the organization, let's say the person has worked for an organization for more than 5 years, and there is no change. There is no kind of that someone has been given, let's say, a study package to go and improve on the skills, or they are not even giving them further training. Someone may just say no, because of this factor, then it's not good for me because I'm not building my career. I'm just here eating the money they are paying, they are giving to me. So someone can just say, you know what, I'm leaving. But we are saying these causes are controllable to the extent that you can prevent that person. You talk to the person and you try to, if the person says there is no career growth or development, you don't promote people, you don't even motivate them. So you try to pick out some of the motivation, these most motivations. They can be either by benefits in kind, or you give them some study packages and others. So that is in the sense that those costs, they can be controlled by the management. The last one, we can talk about the poor working conditions. Poor working conditions is different from the poor working relationship. The other one is the way how people interact with each other, the poor working relationship. But this poor working condition, it is the general, let's say the policies. Let's say someone is not supposed to, let's say, to rest or to have something, let's say to eat even water. It's not provided for at the workplace or the workplace. You may find someone just leaves the organization, not because the organization is not paying, but because the environment where the person is working is not favorable for the person. Then we can talk about the uncontrollable ones, whereby the organization has no control about the change of or the movement of the employees. The first one, we have the greener pastures. This happens to most especially these, let's say if someone has got another opportunity, let's say outside the country, and they are giving the person a different amount of money, so they will just try to leave the organization. And even if you try to stop them, they will not leave, because when they go out, let's say when they go outside the country, they expect so many benefits to be attached on the new employment they have acquired. The second one, we can talk about the family problems. Someone may be having family problems, and those problems, they force the person to leave the organization. And let's say someone may be told that let's say we are changing the environment, we are supposed to be living the other side. So if you want to be working at the organization where you are, then the family is going to be separated. That one can force someone to leave the organization. The third one, we can talk about the health issues. If someone is, let's say, having some health problem, someone is sick, you expect the person to leave the organization and goes elsewhere, whether to work or to go for further treatment. The fourth one, we can talk about further training. If someone goes for more studies, someone can just leave the job because he wants to get some extra knowledge on whatever he or she had at that time. The fifth one, we can talk about early retirement. This early retirement makes people to leave the employment even when they are not supposed to leave. Because someone, when the person applies for an early retirement, you expect that the person is going to leave the job before even the retirement period. The last one, we can talk about death. If someone dies, automatically we expect that person not to work anymore. And that's all I wanted to talk about the causes. Let's look at some of the effects of labor turnover. We said labor turnover, to the smaller extent, labor turnover is good. It's good in a sense that some employees are going to get chances to get promoted. So the people who are left in the organization, when let's say the person leaves the organization, those ones who are left and they are given an opportunity to be promoted, you may find that they can do better and they improve on their performances so that they can maintain their promotions. The other one you can talk about, when someone leaves the organization, we expect that some people are going to come in with a different experience. So we expect more qualified people. I was saying we expect more qualified employees to join in and help the company to grow to a next level. That is to a smaller extent. Those are the ones I can give you to the smaller extent, or the positive part of it when there is labor turnover. But we can talk about the extent when employees leave the organization to a larger extent, or there are so many employees who are leaving the organization. That one, we said it affects the organization in such a way that the company is going to be incurring more costs, as in they can be in terms of the preventive or the replacement costs. The preventive costs, those are the costs we incur to maintain the people who are leaving the organization, to make sure that we convince them they stay and they be working for the organization. But when they insist and they leave the organization because of, let's say, for the other uncontrollable causes, then we expect to incur more costs on hiring the new applicants and training them, because they don't have any idea of whatever the company may be doing. So we expect to incur more costs, and those are grouped into the preventive costs. Those are the costs we can give to the old employees not to leave the organization, or we incur the replacement costs that are supposed to be paid to the new recruits. So these preventive costs, we can talk about them in terms of cost of providing benefits like lunch, pension, gratuity, and some even you can give them shopping vouchers. Because if, let's say, someone has been working for an organization for 5 years, you say that the people who have been working with the company for more than 5 years, we are giving them, let's say, gratuity of 5% of their, let's say 5% of their salary. That one, it will be on top of what they are receiving monthly, but at least it is an appreciation that someone has been working for the company and the company has benefited. Even the person is given something. The other, we can talk about the cost of providing good working conditions. We said the good working condition may be, you may provide some small services. You can provide, let's say, water, lunch, and some break. You give them break time. The other one, we can talk about the cost, the recreation facilities. That one is, I think it is self-explanatory. The other one, we can talk about cost of providing educational facilities. You may be giving educational facilities to their families or their children's, or you are giving the educational facilities to themselves by giving them, let's say, study packages. And when they are on let's say, on study leaves, you give them at least, you give them a reasonable study leave when you are paying them. Those are some of the preventive costs. But let's talk about the replacement costs. These replacement costs, those are the costs we incur as the new employees are joining the organization because of the old one leaving the organization. One of the costs we incur the cost of recruitment and the selection. When you are doing a recruitment, you may find that you are incurring certain costs. Let's say these costs may be in the cost of advertisement. You put the job vacancies in the newspapers, whereby you incur some costs. There is also cost that is incurred after the applicants have applied and you are screening them. The people who do that job, they are paid money, so you are incurring costs. That is cost of recruitment and the selection. The other one is cost of training new workers, because they come, even if you recruit someone who is experienced, but we know that you are supposed to give them training because they are not aware of what the company is dealing in. They have to know the do's and the don'ts of the organization, and they also get to know the product the company is dealing in. The third one, we can talk about cost of the tools and equipment that are damaged because of inexperience or incompetency. You may find that at their first time of work or the first 2 months of work, they may be causing losses in the organization, not because they just want those losses to happen, but they don't have the skill that is needed to do the job in a right way. Then the last one, we can talk about the cost or the loss that is incurred due to the interruptions in the production. When the employees leave the organization, we expect that whatever they have been doing is going to be on hold. So when those things are on hold, we expect that we are going to be incurring losses. If those people they were engaged in the production process, we expect that the goods they have been producing, they are going to be reduced. So when they reduce, we are expecting a loss, because we may be having a steady supply, a steady demand, and when the employees are not enough, we expect it to be producing less. And when you are producing less, we expect that we are losing some customers. As we're losing the customers, the costs, the loss we've incurred is as a result of those employees who left the organization. By the time you make the other one ready to replace the one who left, you will find that you've made a lot of losses. So let me give you the general ways of how we can reduce the labor turnover. This is as in general how we can reduce the labor turnover, but I know you can give out some of these because we have been talking about them and they are the same things, but here we are just giving them in general. The first one, we can talk about open communications, whereby you ask the employees what do they want before they leave the organization. You sit with them, you discuss what they want, and you may find, or you may be having a solution to their problems. The other scenario, you can even just put a suggestion box that employees put in there, so that those employees, they put in their complaints, and with the time you pick those complaints and you try to improve on some. You may not do all of them, but at least you give a change to whatever scenarios those employees were facing. The second one, we can talk about engaging employees or encouraging employees to participate in the management. When you encourage someone to to be part of, let's say, the management meeting, you may find that people, they will not even argue that we want, let's say, more salary, because they will also find, they will find out from the meeting that what the company is going through is a bit complicated to the extent that they cannot even demand for a salary increment. Because if you exclude them, for them, they just be thinking that the organization is performing better, which will not be the case, because when you make them get involved in the meetings, you may find that they get to know what the company is really facing. If it is a general problem that the company is facing, for them, they also understand and they lower their expectation gaps. The third one, we can talk about the non-monetary benefits. These non-monetary benefits are good to the extent that if someone is not paid well, but at least at the end of the month or at the end of the year, someone gets something like gifts and donations. Someone, let's say, gets these old company cars. You may find that someone has got, let's say, a company car, and the company car may not even be worth what the employee is offering to the company, but at least the person gets motivated and pushes the activities that are supposed to be done by him or her. The fourth one, we can talk about the way we handle the conflicts between our employees. If, let's say, our employees have some misunderstandings, we expect them to be having a room where they can address their issues so that they get assistance. Because those things happen since the organization becomes the collection point. Someone comes from a different place and they join the organization. So when they join the organization, they come with whatever they have, and it's the employees who are there, the fellow colleagues, the person is going to be dealing with, and so they will be having misunderstandings. By reducing, because those misunderstandings, if they are to a greater extent, they can force someone to leave the organization, because those are the ones that are causing the poor working relationship. The other one, we can talk about introducing the incentive schemes. These incentive schemes, they may be bonus schemes, they may be non-cash schemes, whereby you may be allowing, let's say, employees to have a share on the company profit, to the extent that you may put a criteria whereby if someone reaches that target, then they are supposed to be getting, let's say, 1% of the company profit on top of the salary they are earning. That incentive will make someone to work so that to achieve that bonus that has been introduced. So when you're introducing the incentives, make sure those incentives, they are also, first of all, they are also attainable, not setting goals that they cannot be, even no one can achieve. You set a goal, but to the extent that you are just making employees not to earn that amount of money you are putting there as an incentive, because you are setting a higher target or unachievable target, which is unrealistic. The second last, we can talk about providing good working conditions. If you provide a good working conditions, I've explained that point, that people will stay in the organization. You can talk about even fair rates or fair pays. You increase on their salaries and allowances. And these days, some of these organizations, sometimes they even extend credit facilities to their employees. By the time someone is thinking of leaving the organization, you may find that, let's say, the person has acquired, let's say, long-term loan, which cannot force someone to leave the organization. because you may find by the time someone wants to leave the organization, you cannot settle the loan. So that one also keeps the employees, but that one comes as at least as a last resort or point. Then we are going to look at the measurements. How are we measuring the labor turnover or the labor turnover rate? We have 3 methods which we can use to determine the labor turnover. We have the separation method, the replacement method, and the flux method. The first one, we are talking about the separation method. This method takes into account only those workers who have left during the period. We are talking about the workers who are leaving the organization. So the point will be, how are we going to be calculating the labor turnover? It will be, labor turnover will be equaling to the number of workers who are leaving the organization or who left the organization over the average number of the employee. We are dividing the average number of the employee, not the total. We are dividing with the average number of the employee or average number of workers during the period. And these average numbers of workers, we are comparing the number of workers at the beginning of the period and those ones who are there at the end of the period. Then we divide by 2 after summing them up. So when you get the percent that is more than 100%, you just know that there is a very high rate of labor turnover. When it is below 100, you just know that will be an indicator that the labor turnover is not much. The second method, we can talk about the replacement method. Replacement, as the word suggests, those are the people who are coming in to replace those who left. So it will be the number of workers replaced during the period over the average number of workers during the period times 100. The last method is the flux method. This method shows the total change in the composition of labor force. The total change, we are talking about the change, meaning those employees who have left and those who have joined. But you have to make sure that these people who are joining the organization, they are not joining because the company, let's say the company has extended. Let's say the company has created a certain department. Let's say they have put another branch somewhere. No, these employees, they are supposed to be replacing those who were there, not those employees who are coming in the organization as a result of, let's say, an expansion of the company. No, we are excluding those ones. So the labor turnover using the flux method, it will be the number of workers who left the organization plus the number of workers who replaced those who left over the average number of workers during the period, multiply by 100, because we are computing it on annual, on a percentage format. So that the note you are seeing down here is on the basis that the employees who are joining the organization should not be as a result of the extension of the company or a department. Okay, we can proceed to the next one, where we are going to be talking about the payroll accounting. This payroll accounting involves just the computation of the gross pay, the total amount of money that is supposed to be paid to the employees, and the deductions which are supposed to be done or deducted from those salaries. In these computations, we are talking about the gross pay and the total payments. These total payments, we have statutory deductions. There are some statutory deductions like a pay, like NSSF contributions, that 5% as per the Ugandan Act, the 5% that is contributed by the employee and the 10% that is contributed by the company to the NSSF or to someone's NSSF, National Social. Then we have also the non-statutory deductions. They may be in form of, if let's say someone took a salary loan and that salary loan is coded on someone's payslip, you may find that those deductions are made before the person receives the salary. That money is deducted before the person receives the deduction. It is deducted in the same way they deduct the pay as you earn and the NSSF. And the last non-statutory we can talk about is, let's say, lunch allowances. No, lunch deductions, because you may find that some employees they have a benefit. Let's say they have a benefit of lunch. They are given lunch at where they are working, but on top of the lunch they are giving them, there is a certain contribution they make towards that lunch. So that deduction is made before someone receives the salary. Those are the ones. When we are talking about the payroll accounting and labor cost accounting, they are different in the sense that for the payroll, we are only looking at how can we accumulate the gross pay of someone, and we deduct the statutory expenses and the non-statutory expenditures or deductions that are supposed to be removed from someone's basic salary. But for this labor cost, for it, we are aiming at cost ascertainment. We want to know the whole cost we've incurred. We don't care about the deductions. We are caring about how are we accumulating the money we are giving this employee. So they are different in that sense, that the payroll accounting is considering the gross pay, and at the same time it is considering the other deductions that are made on someone's salary. But for this labor costing accounting, for us, the emphasis is about ascertaining the cost of labor. How much have we paid this person, and how much can we trace on the product, and what can we not trace on the product? I've given some differences here, but these differences, they are just as per in terms of what is included, what is not excluded, or what is removed from someone's basic salary. You may find that this side of labor costing, we are just computing the insurance, let's say the insurance compensations we are giving, the termination benefit we are giving to the person, the employee bonuses, the overtime, the salary we are paying, and everything that we are paying to the employee, we add it up. Then for the payroll accounts, for it, after knowing the amount we are paying the employee, we go ahead and look at the social security fund, those are the NSSF, and the income tax plus other welfare and other charges. Then allow me talk to you about these functions of the payroll, because most of the times when the cost accountant does the costing, the labor costing aspect, then they send the things to the HR. The HR, they are the one who's handling that payroll function. So want to know what is the role of the payroll function. The first one, they do the balancing and reconciling payroll data. They make sure that the amount they are supposed to pay you, they have added everything, and they also reconcile with the expenses or the deductions that are supposed to be made on someone's salary. They compare someone's salary with the payroll or the pay slip deductions. When they deduct everything, then they make